to the next point. We should ensure whatever we say is clear.
That means work is being done. We can see that it is in opposite direction. It is against.
Hello students, my name is Mr. Jameson Yaro. Today, once again, I'm going to take you on accounting. Last week, we discussed on a topic, company accounts. And before the company accounts, I said we have to define what a company is all about. We define a company as a business owned by people and operated as a legal person on behalf of its owners with the usual aim or motive of maximizing profit. We didn't stop there. We discussed the types of company, or rather kinds of company, which I itemized them as unlimited companies, company limited by shares, companies limited by guarantees. We discuss the characteristics of companies, which I said, 1, legal entity, limited liability, perpetual existence, and a law authorizing the company to operate on a specific line of business. We didn't stop there. We discussed again the types of company, which we defined a private company as the one that is operated restricting its members not to sell their shares on the pub, that is in the stock exchange market. And also, its shares are not transferable. We also said a private limited liability company ends its name with the word limited. That is, by abbreviation, LTD. Public company as well is the one that is prepared, which its shares are sold on the stock exchange market, and shares are transferable. Shares can be sold to other shareholders without the knowledge of the other shareholders. And also, it ends its name with the abbreviation PLC. Then, we stopped there, and I told you, when we meet again, we are going to continue with the topic, formation of a company. Today, we are going to look at the formation of a company. In the formation of a company, the following procedures must be followed. 1, the first step is to get the promoters. These promoters are the ones conceived the idea of a company and undertake to fulfill all legal requirements of the venture. The company, these promoters, the shareholders are not the ones that will initiate or establish the company. They are the ones that will provide the capital. But those that will initiate or establish the companies are the promoters. So the promoters first will be needed, and they are the ones that will sit down and initiate what type of company is to be established. Then, having done that, for the company to operate legally without molestation, in fact, proper documentation ought to be done so that the company will have a legal right to operate without somebody or some people questioning the legal right or the permission to operate such a company. 2, the following documents will be filed with the Corporate Affairs Commission. These are Memorandum of Association and Articles of Association, and a Statement of Nominal Account. These are the major documents produced by these promoters. We are going to discuss them one after the other in our subsequent lesson. Memorandum of Association and Articles of Association, and as well as the Statement of Nominal Capital. It is a statement that contains the amount which the company will be used to establish, which would be used to establish the company. That statement is known as a statement of account. These promoters will produce this. But the major documents are these two ones that I have mentioned: the Memorandum of Association and Articles of Association. 3, the documents are scanned and taken to the Corporate Affairs Commission for verification, for checking. After the necessary things have been done or completed in these documents, these promoters will take these documents to the Corporate Affairs Commission, which is in charge of the registration of new companies and validating of companies for verification. These documents will have to be verified or checked properly before the next line of action will be taken. Number 4, when the Corporate Affairs Commission receives and approves the necessary documents, then it issues a certificate of operation. This certificate of operation, it is only the public limited liability company will be given such a certificate, but private limited liability company are not given. A private limited liability company, once it is established, it is automatically given the license to start operation. But public limited liability company will not start operation immediately unless or until the certificate of operation is issued to it. We are going to take these documents one after the other. Memorandum of Association. The Memorandum of Association is a document that contained the external rules of the company. It is the document that connects the business with the outside world. And we are going to look at the content of this document, Memorandum of Association. We are going to look at the content or the information that are contained in the Memorandum of Association. 1, the name of the company with the word limited at the end must be contained in this memorandum of association. 2, the registered office. Registered office simply implies where the company will be sited, or rather, the address of the company must be there in the memorandum of association. 3, the object of the company, what the company intends to what? To operate on. Is it going to produce maize? Is it going to produce bread? Is it going to produce shirts or yachts? Must be contained in this memorandum of association. The declaration that the liability is limited. This liability simply referred to the debt that must be forfeited by those invested into the business in case of liquidation. Limited referred to the fact that in the case of liquidation, not all the money will be given to creditors. The capital invested in the money, in the business, is the one that will be used to settle the debt of the creditors. What is left will be borne by the creditors. So that shows that the debt has a limit, has a boundary in terms of liquidation. So that is why this is simply referring to the declaration that the liability is limited. The debt the company will incur and pay it to creditors is limited to the extent of capital invested into the business. 5, the amount of authorized capital. Authorized capital simply referred to the total amount of money that is used to initiate the business. Total amount of money that is going to be used to initiate or to start the business. Let's take, for instance, if it is 100 billion naira that is to be used to initiate a business, that 100 billion naira is known as authorized capital, and it must be stated in the memorandum of association. And this authorized capital has 3 names. You either call it authorized capital, registered capital, or nominal capital. Still serve the same thing. So it must be stated there. The names of shareholders must also be stated in the memorandum of association, so as to make people know who are involved in running or owning this company. So these are the information that are contained in the memorandum of association. As I've told you, it is a document that connects the outside world, which is the public, and the company, links the company and the public. The next document is the Article of Association. This is a document which states the internal regulations of a limited liability company. It contains the regulations which covered the internal rules of the company's affairs. Yes, how the company is run, or are contained in these articles of association. How managers are appointed or recruited, how auditors are also appointed, are contained in these articles of association. How salaries are going to be fixed on workers, right from the senior cadres to the lowest cadres, all are going to be what? Stated. The time That is the timing of coming to work and also the closing hours. All will be stated there. The punishment, the promotion, and what have you named them, all will be what stated in these articles of association. Then, let us go and see the main particulars of these articles of association. Number one, the rights and duties of shareholders. The rights and duties of what? Shareholders in the company. Shareholders are the real owners of the company. They initiated the capital, they sourced the capital, and then it was the capital that was used to initiate or establish the business. So shareholders are the owners of the companies. Then we have two, the duties and power of directors. Directors, in fact, they are the ones that run the affairs of the company. Their duties and powers are all stated in these articles of association. Then, three, how directors are appointed. All will be stated in these articles of association. If directors are going to be appointed without any consideration or without at least any merit that will be attached, so it be. Or if there are merits, or if there are things that are needed, all will be spelled out in this article of association. Then the rights and duties of the members as between each other and the company. It is your right as a worker. You have your right. Just like these shareholders have their own rights. They have their right as a member. They have their rights. As a shareholder, you have the right to demand the bank statement or financial statement of the company. Financial statement of what? Of the company. You have the right to hold your shareholders meeting. They have the right to attend the general meeting, which is normally held at the end of the year. And also their rights and duties as between them and the company. Then number 5, the procedures for accounting and auditing of the company's books. Yes, in a company, we have the chief accountant. We have accountant 1, have 2, 3, and even 4 that are in charge of the financial inflow and expenditure of the company. Now they have what we call internal auditors. Internal auditors, in fact, sometimes they don't have the power to check some other books. There are boundaries which they will not go. Now, if the shareholder decided that we are not going to rely on our internal auditors alone, we will have to employ the services of external auditors to audit the financial activities of our company. So it will be stated in the memorandum, in the articles of association. The procedures, we have the procedures. In accounting, we have so many methods like the financial account. We have the straight line method. We have the T method of preparing the final accounts. And we have the T method, which is known as the horizontal method. And we have the vertical method. Also, which majority or big organizations use the vertical method. The method that is accepted will be stated here. So all these things are information that are contained in the articles of association. Then we have another document called the prospectus. This is a document issued by limited liability companies inviting the public to subscribe to their shares. It contains details about the company's shares. It is prepared only by public companies, just like what I've just said. Certificate of incorporation is not given to private limited liability companies, but only to public limited liability companies. So the same thing with this. So this prospectus is only used by public limited liability companies. They use it to advertise their shares to the public. They use it to, it's just like handbill. The prices of the categories of shares will be stated there. And their discounts all will be stated in this prospectus. So as such, prospectus is a document that is used by public limited liability company to invite the public to subscribe to its shares or their shares. Then we have the certificate of incorporation. This certificate or this document gives legal authority, legal backing for a company to operate without molestation. Like I said earlier on, only the public limited liability company can use this certificate of incorporation. But the public don't use it. Private don't use it. Only the public. So as such, before a public limited liability company will start operation, unless this certificate is given to it. Summary. Students, with this document, we have come to the end of our lesson and hoping to begin or continue from where we stop in our next lesson. But I'm going to summarize what we have just learned. In summary, during the lesson, we learned about how a limited liability company is formed, the two documents that are produced by the promoters, such as the Memorandum of Association and the Articles of Association. In the related development, we also learn about the information that are contained in the two documents, that is, the rights and responsibilities of shareholders, duties and powers of directors, internal rules and regulations guiding the affairs of the company. That is, in summary, what we have just learned. Now, you have this as your assignment. 1, write short notes on the following. A, Memorandum of Association. 2, Articles of Association. C, Prospectus. D, Certificate of Association. And then question 2, state the information contained in Memorandum of Association and Articles of Association. I'm taking it again. Number 1, write short notes on the following. 1, Memorandum of Association. B, Articles of Association. C, Prospectus. D, Certificate of Association. Certificate is association. 2, state the information contained in Memorandum of Association and Articles of Association. Reference. 1. Essential Financial Accounting for Senior Secondary Schools by O.A. Longe and R.A. Kazim. 2. Past questions and answers for WACS, SSCE, NECO, and GCE from 1999 to 2019 by R.A. Kazim. Students, we have come to the end of this lesson. But before we go, I still remain Mr. Jameson Yaro. My contact number is 090 46 95 74 53. I repeat it again. 090 46 95 74 53. Stay safe. Keep learning. I remain Jameson Yaro. Thank you. See you again.